stacking surfer. I think I'm your best friend. Balances in your bank and stack. Welcome everybody to the channel today. I've got Andy here again with us. Andy Schectman from Miles Franklin. He is the CEO of Miles Franklin and also known as the time traveler when we're talking about gold and silver. He seems to be getting everything right these days. Andy, welcome to the channel.
I got lucky. You know, it is. I mean, the truth of the matter is when you listen, when people, and that's very flattering of you, I appreciate, but you know, man, when no one ever talks about the ones they got wrong. And the truth of the matter is that I've been at this for 35 years and this is the main one. I've had some good calls, but this one, it's the first time I've done it publicly. I've made some impressive calls with my clients. I told everyone to get out of the Swiss franc and into gold in 2001 when the Swiss said we're going to stay out of the European Union. But I said to all my clients, our business was founded on Swiss franc investments. And I said, you guys got to get out now and buy gold because the Swiss are claiming that they're going to remain autonomous to the European Union, but they're an export nation who sells to all the countries surrounding them who will all join the European Union. And if you're buying watches or chocolates from Switzerland, at some point, you forego the accuracy of the watch or the sweetness of the chocolate and buy your watch from France and your chocolate from Belgium if you have to first convert to a super expensive Swiss franc. And I told everyone to get out and buy gold. Gold was under $400 or right at 400. One of the best calls I ever made. Never made that publicly. I told people in 2010, switch your gold to silver at a ratio similar to what it is right now. That I did do publicly. The first YouTube video I did, and a few months later, 7 months later, it was 37-1. I told everyone to do it at 85-1 7 months earlier because it was an anomaly. Much of my success in making calls like that have always been centered around identification and exploitation of price anomalies. But I guess we'll see where it ultimately goes. A lot will be more visible, I guess, in the next few weeks with the BRICS meeting.
No, I agree. And it's, the key is that I found with things is you can make some predictions on what might happen, and you can also make some predictions on when it might happen. It's really hard to get both those things right.
Look, I mean, you got to be out of your damn mind to be naked short in the silver market right now. And I think that you could argue that this is the gyrations of commercial banks that are trapped, that are getting squeezed and doing all they can to knock it down to cover their stale short positions. What we've seen is tremendous resiliency. Before, man, when they would step on it, they would step on its nuts and really step on it, and then its neck, and it would never come back. And it would take forever to come back. And now what you're seeing is immediate bounce back, wasting of ammunition, only making the ultimate outcome like a coiled spring or a beach ball. You push further and further and further underwater till when it gets past your hand, it knocks your chin off as it comes up. And that's the kind of demand that I would expect to see when you see a sovereign nation like Russia say this. I would argue India and China have been doing it without saying it. India has imported over 800 million ounces of silver in the last few years and really has been very quiet about it. China is the second largest producer of silver in the world, and maybe they're the largest. I mean, who knows how much they actually produce. But now, as we've talked about on your show, they're flying all around the globe and buying concentrate and doré bars, largely in Latin America, from the miners directly, disintermediating the marketplace, the commercial banks, and the exchanges, which provides cover to their acquisition, paying double what the West will pay for unrefined sludge, in essence, and bars that are crudely refined by the miners before they get full refined by the refineries. And that is indicative of the demand for silver. The Citibank, their lead analyst, Max Layton, he says, look, silver's up 35% so far this year. It's leading the silver or the metals complex, but that they expect it over the next 3 months to $35 and 38 or higher over the next 6 to 12 To me, those are conservative, very conservative. But this is a game that won't end well. You can't trade 2.9 billion ounces of silver per day in London, which is 3.5 times annual global mine supply, on this leveraged, ridiculous scam of an exchange without running into some serious problems when you have these sovereign nations standing for delivery. In the month of August, 8.1% of the entire silver float in London was delivered. So the only reason they're able to get rid of or get away with this, in years past, they got away with it because the countries that are now draining the exchanges using our suppression against us, who are now wise to the game and therefore quiet to the stupidity of the West, keep it as quiet as long as they can and just pickpocket whatever they're stupid enough to short, was they weren't coordinated or sophisticated or motivated enough to do it. They are now, and that's how they win, where 8% is delivered off the exchange, where this is a continuation of what we're seeing all around the globe. So ultimately, silver goes higher than anyone thinks possible. When you add into it, for the first time, a government officially saying it will be part of our reserves, this is a big deal.
Andy, thank you for all of that. I see it the same way personally. So it's interesting. I get a lot of comments when we do these shows together from people. And there's some people that will look at it as, hey, we're talking silver. You have a company that sells silver and gold, and all you're trying to do is pump it. And they're not calling you a pumper. They're just saying, hey, having someone talk about that. But the reality is anytime you go to buy something, you really want an expert that is giving you advice and advising you on that. You still have your choice where you buy from. You still have your choice whether you buy or you don't buy. We have all of these global countries and the world banks, basically all the central banks everywhere, are starting to buy and have been buying a lot of gold, but they're starting to look at silver now.
In terms of the central banks, I wanted to talk about Poland for a moment.
Yeah, let's do it.
They've been a large purchaser of gold over the last couple of years. And there's a man named Adam Glapinski. He's the head of their central bank, who's caught my eye on a few things that he said. And I may have mentioned this to you before, but I'm going to read it to everyone again so you understand the way that when we speak of crumbs, I've been able to put these crumbs together. And I think a lot of these people some of them are good people. Some of them have, I think, conflict in the way things are playing out, and they want to drop some crumbs for people to interpret. I do believe that. And there have been a lot of crumbs dropped along the way. Poland has been one of the largest purchasers of gold over the last couple of years, and they've actually accumulated 420 metric tons of gold, and it puts them in an exclusive club amongst the world's largest gold holders. I think they have more than the European Union right now. And he says his plans are to have 20% gold holdings, and which is interesting too, because in terms of being more than the European Union has cumulatively, in the respect that gold is now taken over globally as the second most held reserve in central bank holdings, surpassing the euro, which is interesting, and first time since the European Union has been, or the euro currency has been in existence. But he has publicly said that his plans are to reach 20% of the country's foreign exchange reserves in gold. And they asked him not too long ago why they're accumulating so much gold. What's the purpose? And the answer is very shocking, if you ask me. And is this a crumb? Kind of seems that way to me. And, I'll let you decide for yourself. And I may have read this on your show once, because he said it 6-8 months ago. The question is, why does the central bank own gold? And he says, because gold will retain its value even when, now get this, someone cuts off the power to the global financial system, destroying traditional assets based on electric accounting records. Of course, we don't assume that this will happen, but as the saying goes, forewarned is forearmed, and the central bank is required to be prepared for even the most unfavorable conditions. This is why we see a special place for gold in our foreign exchange management process. After all, gold is free from credit risk and cannot be devalued by any country's economic policy, Besides, it is extremely durable and virtually indestructible. So the point I want to get across there, if those of you who have read The Great Taking or listened to it on YouTube, which I think everyone should, David Rogers' Web, if you haven't, what are you waiting for? You should watch it immediately. You have a central banker here saying when someone shuts off the power to the global financial system, destroying traditional assets based on electronic accounting records. Now, is that a crumb? You tell me.
Well, I have gone to all paper statements with my banks and my brokerage accounts. And, every time I log in digitally, they try to take that away and get me back to paper. And I am paying a few bucks a month to do that. But to me, to your point, if something does happen electronically, I've got at least a record that's on their letterhead.
Like the people at Bank of America the other day, their account said zero. Of course, their debt didn't say zero, their loans didn't say zero, but their assets did. What are you going to do when that happens? How do you go back and say, no, wait, what do you mean? I had all that money in there, really? And I'm look, this probably ain't going to happen, but the point of it is that to hear a central bank say that kind of floored me a little bit. A central banker say that, and I think it's worth understanding that these are real events in the digital world. And then go look at The Great Taking and read it, listen to it. Go to YouTube. If you don't want to go to thegreattaking.com and download his free book, on YouTube, he narrates it. David Rogers' Web, 1 hour.
Yeah,
and it will freak you out.
In the chat, guys.
It's very important people check that out and then think about it, about what we're talking about here. But yeah, I really do think that things are going to get exponentially crazier. You got the head Citibank analyst talking about $35 silver in the next 3 months, 38 over the next 6 months. I think that's conservative. But yeah, I think the silver market represents the best investment I've ever seen in every metric.
Do you think the U.S. could, what is front running? What are we talking about with revaluing? And is that something the U.S. would actually potentially do with this administration or maybe with a new administration?
The head of the Dutch National Bank has been talking about this for 2 years, that we should revalue gold and offset our liabilities with our gold. Gold is still valued at the Bretton Woods price of $35 an ounce around the globe, and in the United States, it was valued in the 70s. It was $42.22 an ounce. Don't know why they picked that number, but that is the official price of gold on the U.S. balance sheet. I do think they'll revalue it. In fact, I'm quite confident of it. Even Cynthia Loomis, the senator from Wyoming, talked about that at the Bitcoin conference in Tennessee a few weeks ago when Trump spoke about building a strategic Bitcoin account to partially pay off the debt and whatnot. She said, I'm fashioning a bill to, in essence, propose that we revalue the gold that the Federal Reserve is holding on behalf of the Treasury and to partially use it to fund the Bitcoin purchases. I think it's too hard to ignore, actually. You see all the central banks buying it at a level the world has never seen, and they're all repatriating their gold from the traditional centers of safety, the New York Fed, which gives access to COMEX, and the Bank of England, which gives access to the LBMA. 40 banks have brought their gold home from these two epicenters, and the level of purchasing is off the charts. So, yes, I think revaluation is something we will see happen, and it's look, make it 130,000 an ounce. You could offset your balance sheet like that. And every $4,000 increase in the price of what's that? Right. You offset your balance sheet. Your assets are on par with your liabilities. Every $4,000 increase is $1 trillion free and clear to the Treasury General account. And Janet wouldn't even need to get congressional approval.
You get, a lot of people say we'll never have any kind of a revaluation ever again. There's people that say that we'll never, go back to a gold standard.
Well, and to your point, you go back and look at a graph. You have 180 years of nothing but zero inflation and the highest prosperity the world has ever seen, and growth. And that was when the gold dollar was backed by gold. And the minute the Federal Reserve came in and we unpegged gold in 33, the dollar has lost all its value and inflation has run rampant. And so those people are saying that are just talking heads and mouthpieces for the establishment. The bankers don't like it because it neuters them. It doesn't give them the ability to create money at the behest of their desires. But yet you go back and look, and yes, it was a different time. And so what? We had no inflation and great prosperity. And now we're supposed to believe that 2% inflation is normal. Why not negative 2%? The lower the standard of, the lower the inflation rate, the higher the standard of living. And I think that's important. We may have talked about this last week. And if we did, I'm sorry for being redundant, but I did an interview a week ago. And the guy said, look, money creation has run 7% in this country for the last decade. And that's probably a little conservative, but the law of 70 seconds, mathematical law, you take 7 into 72, and it tells you how long before your principal doubles. So if you buy a bond that pays 10% interest in 7.2 years, 10 into 72, your principal doubles. And if our money creation is running at 7%, money creation is inflation. Rising prices are a symptom. You inflate the money supply. And so 7% money creation would then denote in 10.2 years, the value of your currency is cut in half, 7 into 72. 10 years ago, the currency was worth half of what it is today, or was worth double of what it is today. 10 years ago, gold was $1,200, and today it's $2,650. So gold has gone up just a little bit more than twice or double, or is it that the dollar fell by half? Which one is it? I would argue it's the dollar falling, not gold rising. And this is the point, is that, inflation is a killer, a stealth tax, and it's insidious. But, why not have no inflation? Well, the only time we ever had no inflation was the 180 years when gold was tied to money.
Well, I don't have the chart with me, but there's a great chart that shows the standard of living variance that starts in the 70s. So it basically flatlines on the standard of living while growth continues to skyrocket up. And the people that got that growth were the ones that were holding the assets. And that's right around the time that we were coming off the gold standard. So
and that kind of reminds me of the Cantelon Effect. The Cantelon Effect is an economic term that says the people closest to the money spigot benefit disproportionately. And so, when you have all of this money creation, let's in low interest rates, look at the hedge funds. They borrow money at next to nothing. They pump it into assets, real estate, gold, stocks, bonds, and their assets explode in value in the inflationary environment. When the money trickles down, it might take a year or two or three to the people, it's in the form of inflation, as everything's inflated by inflating the money supply. But the wealthy benefit disproportionately because they were able to take that money and invest it in assets. And the wealthy people across the globe, they have assets. That is what makes them wealthy. And it's not their massive bank accounts. It's part of it, but it's their assets and the appreciation that continues year over year over year over year in an inflationary environment induced by monetary policy that's brain dead and fiscal irresponsibility. And they know this. So they don't care about high gas and high food and high everything because they become exponentially more wealthy, the 1%.
All right. Well, Andy, I think that's awesome. So thank you for sharing that, and thank you for your time today.
Thank you, brother, for having me. I look forward to seeing you again soon. And send me those names. We'll get all the Silver Eagles out first thing Monday morning next week.
Perfect. Thank you. Thanks, Andy.
God bless.